And welcome back live to womenmoneyandpower.com. I'm Cathy DeWitt Dunn. Thank you so much for joining us this wonderful weekend in March. It's hard to believe that we're in the middle of March already, and I'm so thrilled to have Bruce Avellanet back on the show today. Bruce, welcome back.
Thanks. Great to be here, and this is your pre-St. Patrick's Day show.
It's hard to believe that we're right here in the middle of, March. And there's been a couple of milestones here in March. So everybody that's out there, I just wanted you to know that last week I turned a half a century old, so 50 years old, and what a great week it was.
Woohoo! And you've been in the business a lot of that time. I know I have.
Yeah, but you know what? It's just amazing to be able to really sit here and now be on the other side of the hill, I guess, with a lot of the clients here and helping them and educating them on doing things a little bit differently. And the thing that really strikes me, one of the things that really is bothering you right now, Bruce, is the fact that we are in a 5-year bull market and all the signs are out there.
That's right. Happy birthday, bull market. However, I think that's more of an aging bull and no longer a raging bull, to coin a phrase. The market, if you look at the charts, and I realize the charts are tough on radio. However, on our website, annuitywatchusa.com, you'll see a chart from 98 through current times, and there have been 3 successive run-ups and what I'll call crashes or major corrections that you'll see starting in late 99, then again right at the beginning of 2000, 0203, major correction, 08, 09, huge correction. Market lost over 40% of its value, and we think it's building up to that again.
Well, if you take a look at the charts, history always repeats itself. And when a lot of people come into our office for meetings, one of the things that I show them is, look at this chart. Do you see any patterns here? And they're like, yes,
Yep.
That's why I'm here.
What do you think is going to happen next, madam or sir?
Yeah, and I think one of the things that we're really talking about today is how to protect your assets during this volatile time. And I'm really excited to talk to you a little bit about today is how can you take advantage if this market were to reset? And how can you ride it all the way down with all of your money, Bruce, and then ride it all the way back and have some great returns?
That would be with fixed indexed annuities.
Well, people don't understand how they work.
Well, how they work is whenever you get in, let's say you come in with $100,000, you put that in, and what happens the next day is if the market corrects itself, you still have $100,000.
So it doesn't matter.
That's right. If the market dropped 10, 20, 30, 40%, even like it did in 08, 09, you would still have your $100,000. And then the really cool thing is when that market starts back up, and it will because it'll bounce.
Right.
When it comes back up, you're starting out with not half your money, but you're starting out with 100% of that $100,000 if that's what you started with. You'd have $100,000 now with that new raging bull on the recovery of that market. You get the benefit of having 100% of your money at work, not putting you in a position of trying to make up lost ground.
Absolutely. And in a minute, I'm going to go through some of the annual performances of the index from February 2013 current to 2014 and talk a little bit about my favorite crediting method, which is the monthly cap. But right now, I want you to really think about something. I am dead serious. Now is the time to get into these fixed indexed annuities before the market declines. So that way you get the benefit of going all the way down with all of your money. And as the index resets and comes up, you're going to be able to take advantage of it. Also, you don't want to wait. You do not want to wait until this market corrects. And there's a very good reason why, Bruce. Tell everyone.
Well, you don't want to wait till the market corrects. You want to get in before the correction happens because the caps are much higher. After the bull run, the insurance companies can buy those caps at a much higher rate, much more cheaply than if the market has already made its correction and tanked out, in which case you will have the advantage of those higher caps. And lately, we've looked at some of the indexes and the results that we've seen. And for example, for the S&P 500, had a monthly cap of 2.9, and this was last February until this current February, just last month. And in that first contract month, the index made 3.09%, and we realized 2.9%.
And if you really take a look at, the monthly sum cap, which is, a lot of the companies offer, and it's really important to work with a AA rated company, and I'll tell you why. They're able to get higher caps out there. But from February of 2013 to February of 2014, I'm going to run you through the index actual performance, and if you had had a cap of 2.9% of what you would have made. In February of 2013, the S&P 500 index was up 3.0%, and the return would be on the monthly cap
2.9.
In March, the index was up 1.2%. The return was
1.2%.
Okay. In the third month, the S&P was up 4.25%, and you were capped out at
2.9.
The following month, the S&P was down 2.2%.
We were down 2.2%.
The following month, we were up 4.8%.
Then we were up 2.9.
The index was down 3.6%. We received
negative 3.6.
Now, the index was up the seventh month of the year, which was 3.7%.
We had 2.9.
Okay, the following month, the index was up 4%.
We're up 2.9.
The ninth month, the index was up 2.6%.
We're up 2.6.
The 10th month, the index was up 1.8%.
We're up 1.8.
The 11th month, the index was down 3.2.
We were down 3.2.
Now, in February of 2014, which is obviously current results with the S&P 500 index, the index was up 4.0%, and we were capped out at
2.9.
So for that running total, it's not averaging, we add them. What would have been the annual index rate during that 12-month window?
14.15%.
That's huge.
That's
that
great.
Locks in, and that becomes your principal, and you can't lose it. So, ladies and gentlemen, when I'm talking about a monthly cap between 2 or 2.5%, we're not talking over a 12-month window. We're talking about it on a monthly basis. Call us today and find out how this monthly cap strategy might benefit you and how you would like to get in before this market resets at 972-473-4700. Again, that's 972-473-4700. We have offices in Fort Worth and also in Dallas. We'd love to have the opportunity for you to come out and visit with us. You can also schedule a conference call. But it's really imperative. If we take a look at all of everything that's happening right now in the marketplace, all the newspapers, aging bull as Wall Street celebrates a 5-year run. There's angst about how long the party will last and what could stop the stampede. Every newspaper, every publication we're picking up is talking about this bull market is probably close to being over.
Yep. The prediction was that not too many of the bull markets of the last, since World War II, very few of these bull markets have gone 5 years.
And I think one of the things, too, this is my favorite quote this past week in the USA Today. The bull is definitely getting long in the tooth.
That's hilarious.
So just take a look at what your options are. Be prepared for how to position yourself for a potential correction in this market. What has your current advisor recently shown you that's going to prevent you from losses and being able to take advantage of principal protection? And if you have a decline, how you can go all the way down. And when the market comes back up, you have all of your money today. The appointment's free. The strategies are fantastic. No buy, selling, or trading. No transaction fees. We'd love to show you the opportunity today on how you could lock in 2% per month up to 2.5% per month. And with the monthly sum cap, being able to add the performance of the index and tally that and add it to your contract. Give us a call today. Again, the numbers to reach us is 972-473-4700. Again, that's 972-473-4700.
Call and get a second opinion.
And that's the big thing, is how many people have sat down with their advisor and said, what can we do differently if the market does reset? Or are you still in the same old strategies that you've been over the last 2 years?
I've heard advisors tell people to stay in the market. Hey, we're going to get past it. We're going to get past it. And I say, well, not if you leave all your money in. And if you write it down, you're in trouble.
Well, what if you need income?
No kidding.
Yeah, that's the big challenge. Well, give us a call today. We're going to a quick break, but let's show you how you have the ability to lock in some of these monthly caps, not annual caps, monthly caps, principal protection. Let us show you how you could ride the market down with all of your money, and if this market were to come down, how you would be able to benefit from it when it comes back up. That's going to be more money for you later down the road. Again, the number to reach us today is 972-473-4700. That's 972-473-4700. I'm Cathy DeWitt Dunn. We'll be right back.